While being slightly fast-paced, as of 10:35 a.m. Eastern Time on October 8, 2025, Lumen Technologies, trading under the ticker LUMN, is priced at $6.995 per share. This reflects an intraday gain of approximately 1.23%, with the stock showing notable volatility, having moved between a low of $6.88 and a high of $7.65 in the early hours of the trading session. While this modest uptick might appear as simple market noise, it masks a far more complex and turbulent reality beneath the surface. The expectation for many investors looking at a legacy telecom name is a story of slow decline, debt, and irrelevance in a world dominated by wireless and big tech. But the reality is that Lumen is in the throes of a high-stakes, multi-billion-dollar pivot that could either see it become a critical backbone for the AI revolution or buckle under the weight of its own history. The common belief is that Lumen is simply the ghost of CenturyLink, a company saddled with aging copper lines and a shrinking consumer base. This narrative suggests a company in managed decline, a stock for dividend chasers of a bygone era. However, this expectation dramatically falls short of the reality unfolding within its corporate strategy. The real story is one of aggressive transformation, a deliberate and painful shedding of its past to double down on its most valuable asset, its vast, global fiber optic network. The tension isn't just about survival, it's about a fundamental rebirth as a high-growth enterprise focused on the insatiable data demands of hyperscalers and AI developers. This is a battle between its declining high-margin legacy services and the capital-intensive but potentially explosive growth from its next-generation fiber infrastructure. The recent movement in Lumen stock tells this story in microcosm. The daily trading volume, currently at just under 1.6 million shares, is significantly lower than its daily average, suggesting a period of consolidation after a recent surge. Just days ago, the stock experienced a sharp 11.3% rally following an analyst upgrade from Goldman Sachs, which lifted its price target. This wasn't an isolated event. It followed a series of mixed but largely improving analyst actions over the past several months, including a buy rating reiteration from Citigroup and an outperform from Raymond James. This flurry of activity points to a growing recognition on Wall Street that the perception of Lumen is lagging behind its operational reality. The market is beginning to question the old narrative. We see this tug-of-war in the institutional holdings. While major players like Vanguard and BlackRock have slightly trimmed their massive positions, the overall institutional ownership remains incredibly high, at over 85%. This indicates that the smart money, while cautious, is not abandoning ship. In fact, digging deeper reveals that numerous smaller funds and even company insiders, including the CEO and CFO, have been net buyers of the stock, signaling a strong belief from within that the turnaround is not just possible, but underway. Whether you are conducting your online investing through platforms like Fidelity, with its robust Fidelity brokerage and Fidelity wealth management services, or using more modern applications like the Robinhood app for Robinhood stock trading, the data points to a stock at a critical inflection point. Many self-investing individuals using SoFi Invest or Schwab Intelligent portfolios are watching this closely, trying to discern if this is a genuine value play or a classic value trap. To understand the core of this conflict, we must look at what the company actually does. Lumen Technologies is not your grandfather's telephone company anymore. It has strategically divested large portions of its consumer-facing business to focus almost exclusively on its enterprise and wholesale segment. Its crown jewel is one of the largest fiber optic networks on the planet. This isn't just about providing internet to businesses. This is about providing the ultra-low latency, high-capacity data transport layer that powers cloud computing, edge networks, and, most importantly, the development of artificial intelligence. When a major tech company needs to move petabytes of data between its data centers for training AI models, it relies on networks like Lumen's. This strategic shift is most evident in its multi-billion-dollar network expansion. Lumen is aggressively adding millions of new fiber miles, aiming to more than double its U.S. intercity network by 2028. Recent progress reports confirm they are on track, deploying next-generation fiber from partners like Corning that doubles capacity and constructing hundreds of new signal amplification sites. This is a direct response to the soaring AI demand the company itself has highlighted. The expectation of a decaying infrastructure company couldn't be more at odds with the reality of this massive forward-looking capital expenditure cycle. The question for investors using platforms like interactive brokers for their individual brokerage accounts is whether the payoff from this investment will materialize fast enough to offset the persistent drags on the business. The financial reality is where the tension becomes most acute. The company's most recent earnings report in late July showed this perfectly. Lumen beat earnings per share estimates significantly, reporting a loss of only 0.03 cents per share against an expected loss of 0.24. This was a massive positive surprise. However, revenue continued its decline, down 5.4% year-over-year, narrowly missing consensus estimates. This is the core of the bear case. Revenue from its legacy voice and copper-based services is falling off a cliff, and the growth from new enterprise fiber contracts has not yet been sufficient to reverse the top-line erosion. The upcoming earnings report, expected around November 4th, will be a critical data point. For those engaged in online investment, this is the central metric to watch. Will the rate of legacy decline slow, and will the growth in enterprise and quantum fiber accelerate? This leads directly to the monumental challenge and greatest risk facing the company: its debt. Lumen is carrying a significant debt load, a remnant of its past acquisitions, particularly the ill-fated merger with Level 3 Communications. While the company has made tremendous strides in restructuring, successfully extending maturities out to 2029 and beyond, the sheer scale of the debt remains a concern for bears. It constrains free cash flow and makes the company highly sensitive to interest rate fluctuations and macroeconomic headwinds. The reality is that Lumen's future is a race against time. It must generate enough new, high-quality revenue from its fiber investments to not only service this debt, but to begin paying it down meaningfully before the pressures of a potential economic slowdown or higher borrowing costs become overwhelming. Many investors are using the analytical tools on platforms from Fidelity, with its vast selection of Fidelity ETFs and Fidelity mutual funds, to model these debt schedules against revenue projections. Comment below on whether you believe Lumen's massive AI-focused fiber build-out can generate returns quickly enough to overcome its legacy debt burden. The future outlook, therefore, presents two starkly divergent scenarios. In the bull case, the AI tailwind becomes a hurricane. The partnerships with hyperscalers and tech giants deepen, and Lumen solidifies its position as the premier provider of the digital superhighways required for the next decade of technological innovation. In this scenario, revenue stabilizes and then begins to grow. EBITDA margins expand as the revenue mix shifts to higher growth services, and free cash flow turns positive and accelerates, allowing for rapid deleveraging. The stock, currently trading at a fraction of its former highs, would see a dramatic re-rating. In the bear case, the reality falls short of the expectation. The legacy business declines faster than anticipated. Competitive pressures from other fiber providers intensify, and the return on invested capital from the network build-out is slower to materialize. In this world, the debt load becomes an anchor that the company cannot escape, leading to further financial strain and potential equity dilution. The current consensus among analysts leans towards hold, with price targets clustered around the 540 mark, suggesting that Wall Street acknowledges both the potential and the peril. The professional investor, perhaps using a sophisticated trading platform like interactive brokers to analyze options volatility, understands that this is not a simple buy or sell. It is a calculated bet on a corporate transformation. In summary, the story of Lumen Technologies is a powerful lesson in looking beyond the surface-level narrative. The initial expectation of a dying telecom relic is a dangerously incomplete picture. The reality is a company engaged in a dramatic and costly pivot, betting its entire future on the belief that its fiber assets are the key to unlocking immense value in an AI-driven world. The recent stock price volatility, the analyst upgrades, the insider buying, and the intense focus on network expansion all point to a company in motion. The tension between its legacy liabilities and its future opportunities are palpable. The challenge is immense, but the potential reward for those who correctly anticipate the outcome is equally significant. The reality is not yet written, but it is clear that the expectation of a slow fade into irrelevance has been thoroughly challenged by a management team determined to build the future, one fiber mile at a time.